In a appreciating market where it's strong buyers, cheap money, it's also easy to get financing, so you don't think creatively. Will there be more of these opportunities? And what are other sources of lending that people used to do regularly, but now it's just finally coming back because the mortgage industry made it so easy for buyers?
Yeah, so I want our audience to think about this in a larger context. And this is why you subscribe and comment and hang out with us, because this is the key. The Fed essentially took interest rates to zero. And when interest rates were zero and inflation was 2, there's a positive spread there. And what that did was that artificially lifted the market by creating excess liquidity, aka money in the system, and easy money. So what that did was that ballooned asset values. Now that the Fed has started restricting it, what's happening is the water, the tide is going out. And as the tide goes out, there's less water available, less liquidity in the system. Then creative financing pops up. The creative financing things that we're seeing right now is you're seeing owner financed deals. Went and looked at a 16-plex up there in Cedar Woolley, 6 different parcels. They were willing to owner finance it at 25% down on a 5-year call on a 30-year note at 5.5%. When the market's at like 7, that's a good deal. So owner financing in a second position. So maybe you could get the bank at 50% and you could get the seller on the next 25. Another thing that we're starting to see come back is subject twos. Subject two is where you go in and you wrap someone's existing mortgage. Another thing we're seeing more of. We're seeing more lease options. We're seeing more options to purchase. We're getting all the way back into this creative financing. The funding, it's coming from banks. It's coming from local community banks. It's coming from people's self-directed IRAs. It's coming from the cash value of their life insurance. It's coming from a home equity line of credit against their house or against an investment property. It's coming from personal lines of credit. You're just seeing this creativity come back into the market, and it's not coming from all one source. You and I had talked about a deal that I was looking at. I was running around trying to figure out the funding. The funding for that particular deal came from 4 different sources, not one like usual, 4 different notes in basically $75,000 to almost $200,000 increments. I haven't done something with 4 mortgages on it, 4 different private money lenders on it ever. Welcome to 2023 and 2024. We're gonna be getting creative like this. This is why I tell people the deals are out there. One of the individuals said, wait a second, you're gonna pay me like 2 points and 8%. So I'm gonna make like 10% on my money? And they're like, yeah. They're like, well, it just sits in my bank account anyway, and I'm making 0.4, not even a 0.5%, 0.4, and it's sitting in a savings account. And they're like, I'd gladly lend it out and do a deal right now. You're just going to see more of that. Is this kind of, by any means possible, just plugging the deal together. Smash the like button, hit subscribe. Thank you for watching. If you enjoyed this video, watch this one too.